Hello, today we are solving October 2023 Unit 2 question Part B. Calculate the gearing ratio of Tong Trading PLC at the start of the financial year on October 1st, 2022. So the formula for the gearing ratio is fixed cost capital over capital employed times 100. Okay, so this is a gearing ratio you will get. Okay, and this is usually expressed as a percentage. Okay, this is going to be expressed as a percentage. After calculation you will use this. Now to understand gearing ratio, you have to watch a video. I have given a description, okay, link in the description box. So there is a PowerPoint presentation. You can go and learn the gearing ratio and its uses and understand further. So here you have just been asked to calculate gearing ratio. So fixed cost capital over capital employed. So in this we have to understand what are the fixed cost capitals, okay, which are going to have a long term impact. Okay, it's a long term liability. So let's mark here. So the first one is you are going to have the bank loan. Okay, then you will have to include mortgage loan, and the third one you are going to include is a redeemable preference shares. So these are the fixed cost capital. Okay, so let's write the fixed cost capital. So first one is the fixed cost capital. So that is going to be equal to, so gearing ratio is equal to fixed cost capital. The first one is a bank loan. Okay, so bank loan is 24 million. Okay, you will write it plus, then you have the mortgage loan. All the loans you will include. Okay, these are long term liabilities, and you will usually have some interest payments towards them. So that's how you will know that they are fixed cost capital. So then redeemable preference shares, these come under the fixed cost capital. Now you have, next one you have the capital employed. So what is the capital employed? It is the total debt plus equity. Okay, what are the total debt and equity you have? So everything which is coming under the shares, okay, share or retained earnings, everything that's going to come under your equity and debt is going to be coming under the capital employed. Now let's write it here. So all this 24 million, okay, 24 million plus 46,500,000, okay, the general reserves, plus, okay, these are all the things that have helped you to bring in capital into your business. So you will include everything here, 60 million. Then you have the retained earnings. Retained earnings is also a debit, so you will include it. Then you have redeemable shares, from which you had raised some capital, and then you have the share premium. This has also helped you in getting capital into the business. So these are all the things that have helped you to get capital into the business. Now let's calculate. Okay, now let's calculate the gearing ratio. So for 24,000 plus 24 million plus 36 million plus 10 million. So that value is going to be equal to, it's going to be equal to 70 million divided by, so when you add up all of this, capital employed is going to be 175 million. So 175 million times 100. So that is going to be equal to 40%. So the gearing ratio